All right, let's move on then and get a handle on the global cues and the impact on India. Mark Matthews of Bank Julius Baer & Co. is now with us on the show. Mark, first, weigh in on what's happening in the U.S. market. Is there way too much exuberance that's being priced in? Look at the S&P 500, 17% up so far year to date. Last year it was up 24%. The year before that it was up close to about 23%. And while AI is propping up, even in this NVIDIA OpenAI deal, we're talking about $100 billion of an investment. Of that, the cash component is only going to be $10 billion. The rest of it is going to be about future sales coming in from OpenAI as they buy NVIDIA chips. So, is there just too much excitement?
It's hard to quantify this. You may recall in 1995, Alan Greenspan warned about irrational exuberance. I might have got the year wrong. It was around then. And of course, we had the dot-com bull market literally after he said it that lasted up until 2000. So there is exuberance. There are signs of a bubble. You mentioned OpenAI. The CEO, Sam Altman, said last month he sees kind of bubble-like market. But just to use NVIDIA as an example, because you also mentioned that, and it is the bellwether for this technology-led bull market today, NVIDIA trades at somewhere, I think, around the low 30s next year's earnings. So it's sort of in between 32 to 35 times next year's earnings. And that is very expensive, of course, relative to the long-term price-earnings ratio of the S&P 500, which is around 15 times. But is it a bubble? I don't think so. I think a bubble is something you start talking about above 40, maybe even above 50 times PE. So exuberance, yes, but this is something that I think can continue to persist if we look at past bull markets like this, most notably the dot-com bubble, where the top 5 technology stocks peaked at something like 55 times their next year's earnings in the year 2000.
Yeah. So NVIDIA, low 30s P multiple, right, Mark, you're saying? Morning.
Yes, 12-month forward PE is probably around 33 times.
And growth at what, 25% odd?
NVIDIA's growth, I don't know the latest numbers. I suspect it's in the high 20s. Yeah, for the Mag 7, the growth in the most recent quarter was in the mid 20s. It is going to come down into the teens over the next 12 months. Don't you think, Mark, more than P multiples, right, as a metric, perhaps it is this massive spending which is underway, and if there is any slowdown from some of these hyperscalers, etc., because of a variety of reasons. I mean, for example, on ChatGPT 5, there have been lots of some criticism that it's not up to what it was built to be. There has been, there have been research papers showing that incremental benefits are not what is expected for all the spending which is going on. So return on investment is the big one, which has always been the case. You think that at the margin is the risk? Because, I mean, here in India, 30 P multiple is very, very reasonable. 50 is doable. And only when you get to 70, 80, 100, and there are many here, you get into the euphoric, exuberant kind of, band. So just wanted your thoughts there, Mark. Well, the first time that this was highlighted, the idea that they're spending more than they will recoup was in June last year when Goldman Sachs published a report stating exactly that the spend on AI will not be met with an adequate return. And of course, the market has gone up a lot since then. So it had a wobble last summer on that idea. But the earnings growth of the Mag 7 has been so good that the market is willing to give them the benefit of the doubt. And I don't know the answer, honestly, whether this will be kind of like Amazon, say, 15, 20 years ago, was trading on much, much higher valuations. but it grew into those through the exponential growth of its e-commerce and its cloud business. Will it be like that, or will it be a big disappointment? I don't know. I think only time will tell. But I think what we are seeing is already the benefits of AI flowing into the broader corporate sector in a rise in revenue per worker. And it's been happening for a couple of years now. I suspect it is related to AI to some degree. And you saw similar rises in revenues per worker with the introduction of PCs in the 80s and the internet in the 90s, cloud computing in the 2000s. So I think it is going to be very good for productivity in corporate America. But at what price, do you pay for that? That's the big question. I would just say that, as I mentioned earlier, around 30 times is still not a price that you would consider absurd.
Hi, Mark. Good to see you. Well, the U.S. markets have been running on steroids, actually. Nothing to stop it. But there are some near-term risks. And last week, the Senate rejected the Republican as well as the Democratic proposals to at least temporarily fund the federal government. Can lawmakers strike a deal prior to September 30th, or are we bracing for a bit of a shutdown? History suggests that normally they get past it. But do you think that could be a near-term risk?
I don't think so, really, because if you look back at other government shutdowns, I don't remember the last time they had one. It was around 12 or 13 years ago. You have some small disruption, but eventually, they agree to extension of the debt ceiling and things come back online. I suppose the only risk people are thinking about this time is if a shutdown prevents the federal government bodies that do release data from releasing that data in a timely manner, like the labor market data and the inflation data, then the Federal Reserve wouldn't be able to make decisions because it doesn't have the data. So that's something I've read that is a concern, but I suspect it won't end up being anything material.
Very quickly, before we let you go, the dot plot suggests that maybe, in fact, we get 2 more rate cuts this year. Do you think we do?
Yes, we are penciling in 2. And I think the Fed wants to get ahead of the curve. They've clearly indicated the priority is the labor market rather than inflation. And in the labor market, you have very little firing, but you also have very little hiring. So if for whatever reason the firing was to go up, the unemployment rate would rise quickly, and they don't want to have that happen.
Okay, Mark, thank you very much for joining in on the shutdown bid. We've had so many scares in the past, right? But last minute, there's always been a bipartisan deal which has been stitched together, and that government shutdown has been avoided. Mark, great chatting with you this morning. Thank you once again.